Hey guys, thanks for stopping by. I'm Nick, and this is Real Life Money, where we talk about topics that schools don't. So let's get started. In this video, we're going over what's the difference between stocks and mutual funds. So this one's going to be about investing, guys, about your money making you more money instead of leaving it in a bank making dirt interest. So I'm just going to be going over the basics, nothing complex, no calculators, no equations. We ain't no Einstein here. We just want to make money. So let's start it off. What is a stock? So if you own a stock, you basically own a small percentage of the company. We're talking about public companies like Apple, McDonald's, ExxonMobil, Starbucks. So if you own Starbucks stock, you could go into one of their stores and yell thank you to all the customers because the customers are giving the business money and you're making money off of the business because your stock goes up or whatever. I mean, that's what I do. So here's a little side note as well. If you own a stock, how you make money is the stock price goes up. The price could go up or down. That's how you make or lose money. Another way to actually make money in a stock is some stocks give you a dividend. So instead of the actual price going up, they basically give you income from the business. Now, to buy stocks, many people use discount online brokerages. Those trades could range from maybe $5, $7, or $10 per trade. Now that's the basics of a stock, essentially, but what we're really focused on is what the heck a mutual fund is. Now, a mutual fund is basically like a basket filled with individual stocks. So one mutual fund can hold Apple and McDonald's and ExxonMobil and all these different companies all in one package. Kind of like a 2 for $20 thing at Applebee's with those boneless wangs. Sorta, kinda, not really, kinda. It's a package. So because this mutual fund has multiple individual stocks in it, it is called diversified. It has a bunch of stocks from everywhere in one package. So these packages are professionally managed. The managers and people who work with the mutual fund, they pick these stocks and they put them in this package for you to buy. Now let's go into a little pros and cons with both stocks and mutual funds. So let's start with stocks. Some pros for stocks is that it could have amazing gains or returns in a year. It could go up 40%. Another pro for holding a stock is that after you purchase it, of course you pay that commission for that trade, but when you're holding it, there's no expenses. And another pro would be it is fairly simple to find research on that specific company. There's data, different financials that you could look at to help you identify the pros and cons within that stock. Moving on to the cons of stocks. The first big one is that you could lose a lot of money. If that company gets sued or doesn't produce enough sales that people predicted, that stock is probably going down. And so is your money. Side note, if that is a good company, it is probably likely to rebound. It might take a little while for things to stabilize, but you'll probably gain your money back over the long run. Another big, huge, and ginormous con to stocks is that you actually have to do the research. You actually have to be interested and dedicated to actually look for this stuff. So let's move on to mutual funds and start looking at some of their pros. So one huge pro of a mutual fund is that it's easier to do research on than individual stocks. They already have stocks inside this package. they have professionals, or considered professionals, researching all these stocks. You don't have to do that. They're already inside the package. And another main pro for mutual funds, that is why a lot of people like them, is because they are safer and diversified. So check it out. These mutual funds, these packages, have individual stocks, multiple of them. That means it's diversified. It has some stocks over here, some stocks over there. So now, within this package, if a stock goes down, it has others to either maintain that value, or others might go up as well. So it doesn't go down like if you hold one stock and it goes down 40%, you lose 40%. But if you have a stock inside that package, the whole fund doesn't go down by 40% because it has other stocks as well to hold it up. That's why it is safer. Now let's look at the cons to these mutual funds. Starting off with, there are fees involved. People are putting their time and effort to choosing these stocks into this package. You're going to pay for it. So watch out for high fees. I wouldn't really look at anything above 1% in fees, or like an expense ratio it's called. Now another side note that I just thought of, there are things called index funds. So an index fund is basically, it just follows the market. An S&P 500 follows 500 of the largest companies, the Dow, 30 of the largest. It just follows that. So since it's so simple to create, basically, because it's already created with the market, the expense ratio is much lower, like 0.05% type of thing. Now Warren Buffett actually says if you're not like dedicated to actually researching into individual stocks, just go for mutual index funds. They follow the market, they're very simple, low expenses, and you'll kill it. Another con to mutual funds is that there's usually a startup cost with it. Some funds could be like you need a minimum of $3,000 to actually buy the fund. With stocks, all you need is just the stock price. And I'll put in another con, that it could have lower returns than just a simple stock. Like we were saying before, it is safer because it has multiple stocks in that package. One stock could go down, but the same thing, one stock could go up, and it doesn't go up as much because it still has the other stocks holding it down. So that looks at stocks and mutual funds, pros and cons. If I would suggest one or the other, if you're not willing to do much research, I would honestly suggest mutual funds. You don't have to do much research. There's already stocks in the package. You're putting money in the market. If the market goes up, you're making money. So that's kind of the basics of the difference between stocks and mutual funds, guys. So thanks for watching. Hopefully this opened your mind a bit. Start investing a little. If you liked it, like and subscribe to my channel, Real Life Money. We talk about personal finance and development, which could really relate to anyone. So thanks for watching again, and I'll see you in the next one.